Good morning, everyone. Welcome to Windsor Brokers live daily market outlook. Today is Thursday, 8th of November 2012. Another significant day regarding to the calendar, as we have two central banks meeting and their rate and policy decision due today, with the risk of mode being firmly in play following yesterday's announcement of U.S. elections, President Obama regaining his position in the White House for another 4 years. That was quite dollar supportive. Some interruption was seen briefly into this move, but everything is back into normal. Even more pressure seen on the euro on yesterday's GDP expectations for 2013, despite some quite positive expectations. Basically, the data came in very pessimistic way that put additional pressure on the single currency. Also, the crude oil suffered heavy losses yesterday, losing about approximately 5% on the sharp slide from levels close to 89. That was our initial upside target, returning back to the levels approximately below 85 $85 per barrel, with the most of analysts seeing the latest rally just as short covering and fresh entering fresh shorts as a part of the larger down move of the U.S. crude oil, while the gold is still holding a sort of a positive tone despite yesterday's dip down to 1700. I mentioned this in yesterday's written analysis that the gold might dip, according to the technicals, down to 1700 on the corrective pullback from 1731, but overall positive tone established after basing at 1672 low. It still keeps the upside in focus, as we can see during the Asian session and the early morning of Europe. The yellow metal is now regaining ground. However, more action to be seen on the upside break above 1731, or conversely loss of 1700. That might be again a negative signal. As said, quite busy calendar today. As also yesterday, the Greek Parliament, so I do apologize for this, Greek Parliament voted past the 13.5 billion euros package, austerity package, that was basically expected to be approved, causing another protests and problems in Greek capital. With today's banks, European Central Bank and Bank of England, due to release their rate decisions, with the expectations not changing the rates, but Bank of England, the possibility of introducing additional quantitative easing is not ruled out at this point. Almost all of analysis of more of the analysts that were doing the poll at the upcoming meetings see the probability of keeping unchanged policies for both banks quite likely. As far as the Bank of England monetary policy meeting is concerned, the experts' projection range from it should be interesting or to, as usual, a non-event. The majority still believes that there is a possibility of an extension of the asset purchase program by additional 50 billion euros. As we said, the events are due today. The Bank of England starts at 12 o'clock GMT. Unexpected unchanged the rate is seen as on forecast at 0.5%. With our forecast is still unchanged, the asset purchase facility, but as I mentioned previously, some analysts still see the possibility of additional 50 billion sterling adding to the quantitative easing. The European Central Bank comes 45 minutes later at 12:45. With the 0.75 rate expected to stay unchanged. Of course, more focus will be seen on the press conference that is due at 13:30 when the President Mario Draghi will give us some more clues about next steps of the European Union. We expect him to be as optimistic as President Obama yesterday on his speech after the elections. That will be quite supportive for Euro, with of course averting immediate risk on Greek voting for the austerity plan. That is seen as a brief breakout of the current situation. However, the negative tone that keeps the euro pressured still persists, and negative sentiment is seen as a main factor of keeping the single currency at the low levels, especially in light of breaking recent important supports at 128 zone that is now capping the upside. Further from the calendar, just to mention that already released data show that I do apologize, the unemployment in Australia for October dropped from basically stayed unchanged from the previous September release at 5.4%, despite the expectations for slight increase to 5.5%. The unemployment rate in Switzerland also stayed unchanged at 2.9%, again against the 3.3% forecast. The German trade balance for September narrowed to 17 billion euros from 18.3 billion euros surplus seen in August, but still better than forecasted 16.8 billion. That was today's consensus. While trade balance in France narrowed to 5 billion euros compared to 5.3 billion euros gap of month of August, and 5.1 million euros gap forecasted for today. Thus, we passed already the central banks. A brief look at the Americans data that are quite busy today. Canada starts at 13.15 with the housing starts for September. 210,000 new unit starts seen for today compared to 225 of the month of August. Canadian trade balance is expected to widen the trade gap to minus 1.4 billion Canadian dollars compared to 1.1 billion dollars in the month of August, while the new house price index for September is expected to stay unchanged at 0.2%. The later two actually are at 13.30 and 13.15 is the housing starts, as we can see on the calendar. The ECB press conference, as mentioned, starts at 13.30 GMT, and then U.S. trade balance at the same time for September. The forecast shows a slight widening of the trade gap to minus 44.9 billion US dollars compared to the gap of in August of 44.2 billion US dollars. US weekly jobless claims due at the same time are expected to tick higher again, 373,000 compared to 363,000 new job claims seen in last week, and the natural gas storage is due at 1530. We don't have forecast. 65 billion cubic meters has been the release of the previous week, and that will be all from the calendar. Let's turn our focus now towards the charts and see the situation in the markets and expectations for today for the major currencies and commodities. As we can see on the hourly chart, euro is still holding a negative tone. Overnight trading action seen just above initial support at 127.35, moving in the sideways narrow range, with the moving averages still capping. The 20 days one is still limiting the upside approximately at 127.70. This was the top of the overnight session, so quite a narrow range following yesterday's false break and the corrective action above 128 that ticked at 128.75, just ahead of very important 128.80, 129.00 levels that marked the previous high raise at 128.80. Also, it's approximately 38.2% retracement. as well as channel resistance that was yesterday at 128.77. Failure to regain these breakpoints basically triggered the fresh weakness. This was also triggered by negative comments from the Eurozone yesterday that I mentioned at the beginning, dragging the single currency down towards the channel support levels. 127.35 contained the dips so far, but overall negative tone still sees more focus towards the downside, unless we see the gain of yesterday's highs and the quite important 128.80, 129 breakpoint. More risk is seen towards the downside. Currently, most of the instruments are in sit-and-wait mode, awaiting the decisions of the central banks, with more focus in towards the downside. A break below 127.35, that also marks near 38.2% retracement of larger 120.42 to 31.70, pardon, rally will be seen as a trigger for a fresh weakness. Downside 127.00 will come as the next target round figure support, and then at 126.50 approximately is the daily 126.44 currently is the daily Ichimoku cloud base seen as the next target in case of a loss of 127.35 and 127.00. As said, still a negative tone as a part of the larger down move from 131.38 lower top of 17th of October 2012 keeps more focus towards the downside. Our initial barrier is at 128 around figure resistance, as well as 20 days exponential moving average that is still in descending mode on the 4-hour chart, with the indicators holding below their midlines and holding below their moving averages, keeping the downside vulnerable for now, and only break above 128.80, 129 would provide a near-term relief. The British pound is also in the sideways mode this morning and during the Asian session, holding just above recent lows posted yesterday's low at 159.53. Basically 159.50 is now seen as the near-term base, but upside remains well limited at initially 160.00, where is approximately the 55 days exponential moving average, and yesterday's brief higher to 160.41, where the gains were capped with some quick reversal, keeping the more focus towards the downside. Negative structure, but rather negative neutral seen on the hourly chart, while 4-hour indicators are slightly pointing higher, still in the negative territory, I would say at this point, but a slight improvement seen on the MACD that is moving higher, as well as momentum. This doesn't mean much as long as we are below 160 as initial and 160.43 as more important barrier. If we see the break above these levels, then we can talk about some stronger recovery. Otherwise, pressure on the downside is that is still evident, would likely drag the pair lower below 159.50 base. As said, 160.42 is near the I do apologize, and near 38.2% retracement of the latest down leg from 161.74 and 159.53, and the only break here would provide relief, as we have the initial 160, the 20 days moving average, and the 160.30 is the 55 days one, with bearish crossover at 160.74. Keeping the downside pressured for now. A break below 159.35 is to open 159.11 low of 23rd of October. That also marks the base, the floor of the recent range of 159.11 and 161.70. As the daily structure is, daily studies are in the neutral mode at this point, and the break below 159.11, 159 is to signal resumption of the downtrend, near-term downtrend from 163.08 peak of 21st of November. Conversely, a regain of yesterday's high at 160.41, where is also near this is the main bear trend line drawn of 163.08, would provide near-term relief and keep the pair still in the range. From the other side, the break above 161.74.78 is required to shift focus higher. From the other side, the loss of 159 is to confirm the double top at 161.78, 74, and as bearish pattern open way for a further extension with the 90 days moving average at 158.88 seen as initial, and the 200 days moving average at 158.46 currently seen as the next downside target in case of break below 158.50, 159.50 and 159.11.00 supports. The dollar yen is losing traction following a repeated failure at 80.40 levels. The one was on 6th and the one yesterday, with subsequent move lower, briefly denting the 79.80 support. That is also the Fibonacci level. The 79.80 support. We have lost our. I do apologize. I'm trying to find the. Which is also which is also the base of 4-hour Ichimoku cloud, more focusing towards the downside as studies on the 1 and 4-hour chart remain negative, and the price being capped immediately by 55 days exponential moving average at 80.00 as also psychological resistance. Break below 79.80, 79.75 would be quite risky, as this will be signaling some stronger corrective action of the latest rally from 77.94 to 80.67, with the 38.2% retracement at 79.63 seen as initial downside target, and the more important one is 79.27. Low of 30th, higher low of 30th of October 2012, also 50% retracement of the entire rally. Back to the hourly structure that is in the negative mode so far. Regain of 80.40 double top would be signal that bulls are probably coming back into the power. However, the current pullback is still seen as corrective as long as we are above 79.27, 50% retracement and the higher low. While regain on the upside, the regain of 80.40 levels is to shift focus again towards 80.67 and probably to signal resumption of the broader uptrend towards 81.00. On the downside, also along with the 38.2% retracement at 79.63, we have also the 200 days moving average as a quite good support, and holding above these levels is still keeping the overall bullish structure in play. But we have to point on the quite extended indicators on the daily chart that are already starting to point lower. That could be a signal for some stronger corrective action, with the Ichimoku studies being firmly bullish at this point, briefly denting the Tenkan Sen support at 80.00. But overall, Ichimoku, daily Ichimoku studies are still in the bullish tone. And finally, dollar Swiss that is holding its positive tone following a dip down to 93.79 yesterday, and the quick recovery surpassing the previous high at 94.54 and posting the fresh one at 94.70, with the current consolidative action seen just around the initial 94.50 support. Descending studies on the hourly chart might be signaling again some corrective action, as hourly momentum is now fading. It already broke below the midline, with the brief corrective action seen not ruled at this point. The current low at 94.39 is just above 38.2% retracement of the latest rally from 93.79 to 94.70, reinforced by 55 days moving averages, seen as ideal reversal point in case of further slide. However, holding above 94 will still keep the overall picture in the positive mode, and they look for a possible extension upside towards 95.00 round figure resistance, and our next upside target. Main risk is seen on a loss of yesterday's low at 93.79, close to 38.2% retracement of the entire rally from 92.13 to 94.70. That might be signaled for delay, and this is also seen as a break point that might put bulls on hold in favor of deeper reversal, as also this will signal a loss of 200 days moving average that is currently at 93 and 94. Daily structure is now positive as indicators moved into the positive territory, and looking for test of 95, also equivalent to 38.2% retracement of the larger 99.72, 92.13 descent. And we're going to see the oil that was the top loser yesterday, sharp decline of levels at 88.80 and 89.19, where the latest rally got capped. It's textbook failure swing and fresh reversal lower, breaking below the previous lows at 84.33 and basically approaching 84.00 psychological support. With the daily structure now seeing more chances for a further extension of the larger down move from 100.72 to so far 84.05. As I mentioned yesterday, as long as we have the trend line resistance that is currently at 89.74 and 90.00 as psychological barrier intact, more focus will be seen on the downside with the immediate target standard 183.64 10th of October, 10th of July, pardon, 2012 low, and projection of the latest third wave approximately at 80.50, seen quite likely now as the lower top has been left at 89.19, pointing, keeping the downtrend firmly intact for now. And finally, the gold, again, as I mentioned, we have seen corrective action down to 1700. That's actually exactly what happened. 1703 was the low ahead of fresh bounce higher. Losing traction on the hourly indicators are slightly losing traction at this point with the current sideways movements seen during the Asian session. But the price still holding above the moving averages at 10 and 20 days, and the indicators are in the positive territory. That keeps more focus towards the upside. However, the overextended conditions on the 4-hour indicators might see the further hesitation. We have to see the break above 1731 and the target, our initial target at 1734 that we mentioned yesterday, 50% retracement in order to sustain the recovery of 1672 low and open. And next level 1750 approximately is the 61.8% retracement, and the lower high of 17th of October 2012. Conversely, reversal under at this point 1703, 1700 as psychological support would be quite risky, as this will signal top at 1731 and probably to turn again focus towards the downside as a part of the larger down move from 1795, a peak of fresh peak of 2012 posted on 5th of October, with immediate risk seen down and the strongest support area 1670, 1660 that has been approached in the latest dip 3 days ago to 1672. 90 days moving average has been cracked at 1678. We have 1668, 61.8% retracement, and the 200 days moving average at approximately 1663. Break of this significant support would confirm the top at 1795 and allow for a more significant corrective action of the uplift from 1590 low of 15th of August, or a larger one 16th of May 2012 low at 1526. Conversely, lift above 1731.34 is to open way for fresh retracement of the latest 1795 to 1672 down leg. Thank you. That was all from me. Your questions could be submitted now. If you have any question, any suggestion, please, I'll be glad to answer. Problems with the sound. I'm not muted, and from my side everything looks Okay, and running, most likely that you might have some problem with your equipment. My microphone is on the full, and I can see on indicator that everything is correct. I don't know, can you hear me now or not? Do you hear me now? Let me just send you a message. I can see your messages. I can see from my indicators that everything is okay, and it's anyway, if there is a problem, no. Okay, in this case, we're going to end the session. I really don't know what's the problem, but from my side, everything looks clear, and I'm facing no any indication of anything being wrong. I would like to thank you all for being with us, and expect to see you tomorrow again at the same time at 8 o'clock GMT. Until then, wish you a nice day. Keep an eye on the central bank releases and other indicators today. And of course, wish you a nice day and very successful trading. Good luck.